We live in a fantasy world now. Reality has been destroyed.
This is the time that you really need to pay attention.
The probabilities are overwhelmingly on gold's side. That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is another Tom Luongo. He's the producer of the Gold, Goats, and Guns newsletter, blog, and podcast, also an editor at Newsmax and Ultimate Wealth Report, and a contributor to the Financial Intelligence Report. How are you today, Tom?
I breathe in and out, Tom, and I repeat when I need to. Let's just put it that way.
That's sometimes all we can ask for. Sometimes
survival is really just the best, best we can hope for. Yeah. It's funny. I just watched the reconstructed version of Sam Fuller's The Big Red One yesterday, and that's like a theme that's like going through my head. Oh yeah, this one's dedicated to the survivors. Like that's where we are, and I think that's a good metaphor for what's going on in the world politically today. So
well, and of course, the last time I spoke with you, you gave us some excellent perspective, and really that's exactly why I wanted to have you back, and I enjoy all the conversations that we've had so much, because you really, I think, help the quote unquote survivors by giving us your perspective, because there's not many people that have the geopolitical perspective that you do. And of course, you and I first kind of got in touch with you around the beginning of the Ukrainian conflict, because you know so much about it. So maybe we could start there, Tom. What would a win for Russia look like in the Ukraine?
That's a complicated question, because the question you have to ask yourself is, what's Russia capable of militarily, and what's Russia capable of financially and geopolitically? Mm-hmm. And those two answers are not exactly the same. And I know that's going to annoy some people who are in the pro-Russia camp on this, but as impressive in many ways as the special military operation, and I have to call it that Russia's prosecuting in Ukraine, and because there's been no general mobilization, that's why it's a very important distinction. They haven't committed their entire army to wiping out Ukraine, so they're working with very limited resources, and what they've done is impressive. There's no argument that it's impressive. Now, the bigger question, of course, is, are they actually capable of sending in, hundreds of tanks and doing the maneuver warfare and all of that? They haven't proven that they can do that effectively. That's a reality. I don't care what, the rabid pro-Russians, commentators think about this, but they haven't proven it. Prove it to me, and I'm happy to back off on this statement. That being said, they're fighting a very savvy and frankly inexpensive artillery war against heavily entrenched Ukrainian positions militarily, to break the spirit of the Ukrainians and the Ukrainian army, bleed them white, and force the West to continue to support Ukraine monetarily. You're starting to see, and this is exactly what I thought they would do, because why get involved in a massive maneuver warfare campaign across a country that is huge? Everybody forgets, Ukraine is enormous. Mm-hmm. When you overlay Ukraine over the United States, it's like you're fighting from Virginia to Jacksonville to Dallas. It's huge. It's an enormous plot of land. Mm-hmm. So saying any of the things that I just said is not a slight against the Russian military. It's just reality, or at least as perceived reality as with the data that we have today. So that being said, the bigger question is, you're starting to see the stories come out now about the Ukrainians can't pay their troops. They can't fund the government, right? You'll notice that the European Union isn't sending a whole lot of money over there. It's mostly the Biden administration, on behalf of, in my opinion, the European Union and the transnational oligarchs at Davos, doing that by bleeding us white to support their effort to not only destroy us, but to weaken Russia. This is the goal here, while Europe gets to somehow get out from underneath all this nonsense that they've frankly helped create.
Sorry, if I could sure. Just interrupt you for a sec. How does the Lend-Lease Act play into that? Is that the U.S. just trying to, exert some more control over the Ukraine once this is over?
Sure. I mean, well, at the end of the day, think of it as Ukraine. Ukraine's been a vassal state of the West since 2014, right? Since the Maidan overthrow of Yanukovych. So, they're looking at a post, war environment. But back to your original question, right? What does victory look like for Russia? It looks like a popular uprising in Odessa, Nikolaev, and Kherson. Now, from what I haven't been following the day-to-day movings of the war recently because I've just been swamped with other things, some personal, some not. But I think I saw the other day from Alexander Mercouris over at the Duran that Kherson is now mostly encircled, and maybe that's true, maybe that's not. I haven't, but if that's the case, I fully expect them to encircle Kherson and then start the same kind of siege that they did with Mariupol and the south. But the bigger question is, can Russia add to over the course of, and I'm thinking in terms of like the next 2 years, can they add Nikolaev and Odessa and take the entire south and most of the north and then rump Ukraine back to the Dnieper River in the center of the country, taking, finishing off Zaporizhia and, the other oblasts. If they are to do that, that would what victory would look like. It would be leaving Ukraine as a state incapable of threatening them ever again, no matter how much support we throw in there post open conflict, which would then, which would then tie into the Lend-Lease Act that you talked about. Does that make sense?
Yeah, absolutely. And for those that don't know, the Lend-Lease Act is just basically really putting Ukraine into debt for the weapon systems and the support that the U.S. is giving them.
Right.
And I was listening to another podcast the other day that mentioned that the UK had just finally paid off within the last 2 years, I believe, their debt to the U.S. Under the Lend-Lease Act from World War II. So it is a fairly significant idea, right?
Well, and yeah, you're talking about money that, you're looking at it. You think about it this way, who lent them that money? It wasn't the United States government. It was like various freaking banks that we all know, or it's the same cast of characters we're always complaining about, whether we're talking about gold manipulation or we're talking about, world wars or whatever. It's always the same group of people. It's always the same transnational set of old European money interests that are really behind so much of this. And the bigger question I think we should all be asking ourselves, and I've been focusing on, and for the last year, which is there an actual, I hate to say organized, but is there an actual powerful resistance happening to that same script that they're trying to run on us that they did in World War I, they did in World War II, which was that they would set the world on fire and set it to war, and then they would profit on it while they moved their capital into the various boat holes to allow them to, lend out the money for everybody to fight the wars, and then they get to be in charge of the new system afterwards. It doesn't matter if we're talking about, post World War I, the bleeding of Germany, or Bretton Woods, and the flaws of Bretton Woods, or anything else. And I think that that's the setup, and that's what quote unquote Davos is trying to set up, while at the same time instituting global technocratic communism through the European Union, which is even far more Orwellian than anything we'd seen previously. And I just don't think that that's what's going to happen this time. I think there's just too many. I think this time you're talking about too many people who are equally powerful or nearly as powerful saying, you know what? No. And I think the Russians are in this camp. I think the Iranians are obviously in this camp. India is now in this camp. China is in this camp. The Saudis are now in this camp. And I believe the commercial banking interests in the United States, or as centered around the Fed, are also in this camp. And I know that's a minority opinion. We can, hash it out if you like, but I'm telling you, for the last 15 months, I've been trying to call myself on this idea, and I can't falsify the hypothesis. It continues to hold more water than any other explanation as to what's going on.
Mm-hmm. So are there portions of the Ukraine that actually want Russia maybe to take control so they can have some stability back in their lives?
Absolutely. And most of the areas that the Russians have been targeting are ethnic Russian and historically Russian. I mean, Odessa is 65% Russian. Like, Odessa has been like the whole Black Sea coast is Russian generally, all the way up to, you start getting up into Kherson and Sumy and Cherniv in the north along the Belarusian border, and it's much more mixed. But the Russian language is the dominant language, and it's spoken in the region. It's only the Ukrainian government post 2014 that's been outlawing the use of Russian language in education and business and everything else, and it's all been like pushed in order to create this bitter, horrible civil war, effectively, between Russians and Ukrainians. And it's part of the reason why the Russians have not taken territory the way they have, aside from any potential lack of military capability, because they're really not. The Russians aren't designed to. Their military is not designed to invade Europe. Their military is designed to protect Russia. They just at this point have to just redefine that relative to the current political borders that have been drawn to include most of Ukraine, because we decided we were going to try and destroy Ukraine and make it a failed state, and then use that as to be 5 hours from Moscow. It's like, it's insane. Obviously the Russians were never going to go for this. They've been saying this for forever and a day. So once we deal with that, and we deal honestly with that, not in any kind of sophomoric sophomoric virtue signaling about, well, these are the real political borders of so what? The like Sykes-Picot Treaty was drawn up in 1913 by the Brits in order to perpetuate sectarian violence all through the Middle East that we've been dealing with for over 100 years. You think those political borders are a good thing or a bad thing? It's dumb. It's like everything else. These things are designed to be left as poison pills and the Brits always do this. This is the failure of the British Empire. It is receded out of Asia, left all of these things behind on purpose. They did it on purpose. It was so obvious they did it on purpose. And we're still dealing with the aftermath and the after effects of it today. We fought 2 world wars over this. And now they want us to fight a third. It's ludicrous. Mm-hmm. And there's just a lot of people who get it. And the reaction to the world outside of the West to Russia's invasion and all of the sanctions, the shock and awe of kicking Russia out of SWIFT and the attack on the ruble and all of this stuff, and the amount of anti-diplomacy that the United States and the Europeans have engaged in order to try and browbeat Saudi Arabia, India, everybody, into saying no and trying to cut the Russians off from the global economy, has failed completely. They've all just stood up and said, no, we're with them. They at least treat us decently. Like it or not, but Sergei Lavrov walks into the room and everybody shakes his hand. Everybody smiles at him because they understand that the Russian foreign minister doesn't lie to them. He cuts deals with them that are honest. They're maybe in Russia's favor, but they're at least honest, and they know that they can deal with an honest broker. The United States, since the Obama administration took office, has been acting aggressively in an anti-diplomatic way, and it's only just gotten worse under Biden. And even under Trump, it wasn't good. Trump was trying to play his typical big ask, settle down, or settle art of the deal thing. And he just and I wrote for years, I said, that's a bad way to conduct foreign policy. It doesn't work that way. You can't conduct foreign policy that way. Mm-hmm. It may work, when trying to get a condo built on the Upper East Side. It does not work, to settle 1,000-year-old conflicts in the Middle East. It just doesn't work. It's a bad it's a bad interface. Mm-hmm. And but at least he was trying. But at least he didn't get us in any more wars. So you can tell that while Trump was belligerent in some of the most idiotic ways imaginable, he always it was always just bloviating. It was always just a bluff, and you could tell it was a bluff with the Biden administration or Obama Part 3. There's no bluff here. The goal here is to tick everybody off and get them to do something stupid so we can virtue signal and say, see, we have the absolute right to take the moral high ground and cut them out of the global economy. It's first Russia, next it'll be China. It's what they're doing now. It's crazy.
Well, Tom, to anti-diplomatic point.
Right.
Why do you think, or is there a bigger story to why Pelosi still went into Taiwan despite China's warnings against her visit?
I think it was, the Pelosi visit has so many angles on it, not the least of which is the fact that she was feathering her own nest of her son. But I read that story and I'm like, well, of course she would do that because she's Nancy Pelosi and there's no known cure. But there was definitely an angle here where Pelosi was absolutely sent there in order to gauge the Chinese response, see how they would react to it, maybe get them to overreact and do something really dumb. And they didn't, and I didn't expect them to. I didn't expect them to. So I was actually happy for once that, my analysis that cooler heads prevail in 2022 actually was the correct answer, as opposed to, everybody, no one called that the situation in Ukraine would open up into a hot war. Even 2 days before it was happening, I was like, no, it's not going to be that way. And then Putin moved in. And the scary part is that we're going through the same set of motions here. The same kind of playbook is being run by the State Department, the Biden administration, to get China into this and to move them into this position. And with the midterms coming up in the fall, what better way than to leave the incoming GOP, which nominally should be lower, should be less aggressive, even though the GOP is more anti-China than the Democrats are. In general, the GOP is, especially the people who will be coming into coming into Congress, will be far more quote unquote, MAGA folk, right? Who understand that the empire needs to be, that we had to put the kibosh on all this imperial stuff, and no one wants a nuclear war with China. Mm-hmm. The Democrats in Davos are clearly trying to accelerate things past the point of no return by the time the new Congress is set in January, so that they have no other choice. And then, if you leave things in such a heightened state of tension, it doesn't take much for it to boil over, or it doesn't take much for the Chinese to find out behind the scenes in ways that we never find out in the headlines, right? That there was a line crossed that will force their hand. And that's what happened to Putin. And only afterwards can we kind of backfill. Was it the biolabs in Ukraine? Was it, what was the proximate cause? Was it really that we were going to give Zelensky nuclear weapons, right? Like Kamala Harris was at the Berlin Security Conference a week before the invasion, cackling about giving, Ukraine nuclear weapons alongside of Zelensky. Like, is this what, at some point the Russians just got to go, okay, people are crazy and we're invading. That's that. It's just like that's the way it is. Mm-hmm. In the same way that many neoconservative and many classically conservative people have said to me for years, do you really want to see the Iranians or the North Koreans with a nuclear weapon? What would you do to stop that? You, Mr. Libertarian, who doesn't believe in war, blah 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 blah. They would browbeat you with that. Like, at this point, dude, I actually trust the Iranians more with a nuclear weapon than I do anybody else. Or anybody else who's likely to get one. I'd say anybody else, but anybody else who's likely to get one. They want one for the same reason that everybody else wants one. They want the United States and Europe to stop trying to colonize them. It's not that tough.
Yeah.
And once you have a weapon like that, colonization is now taken off the table. That's simple.
So you mentioned, the midterms coming up. Why is the end of September, a really important time to not only the US, but Russia and Europe as well?
It's a really good question. And it's a thing that, has been rattling around in my head for about the last month or so, that I just kept waking up every morning and looking at headlines going, oh, look, late September. Oh, look, late September. Oh, look, late September. Oh, look, late September. Like, oh, and by the way, it's after Labor Day. So the guys in the Hamptons are going to come back to the trading desks. And this is why we always have a kind of October surprise when everybody goes, why are we positioned like this? This is dumb. And, and they look up from, their partying in the Hamptons over the summer and taking their kids to softball games and go back to the desk. And like, this is all wrong. And so we have all of these things happening. You've got the Russians are going back to the bond market in late September. I've heard multiple reports of them pushing for referenda similar to Crimea in places like Zaporizhia and Kherson to join the Russian Federation. Now, whether or not they're going to join the Russian Federation or not, but the referenda are going to be on the table. Now, of course, the Americans are going to lose their minds over this. The Europeans are going to lose their minds over this. Same thing's going to happen in Donetsk and Luhansk, and they're probably going to try and push for Kharkov in the north. Sorry, if I said Kherson earlier in the interview, I meant Kharkov in the north.
Okay.
So Kharkov is, I don't know they're going to get to that state, but I know that Kherson and Zaporizhia are absolutely going to happen because the Russians have been moving in, political infrastructure and the Russian ruble and like all sorts of stuff. Like they're just literally taking the place over and replacing the entire political infrastructure, at an administrative level in the areas that they've already taken and in the city centers that they've already taken. So those things are going to happen. We have the Italian elections on September 25th after Mario Draghi was summarily thrown out finally by a mixture of M5S, Five Star Movement, Lega, and Forza Italia all walking out of parliament on him. You have the Federal Reserve the Wednesday before that on the 21st, that's the next FOMC meeting. All of these things are coming together for late September. And the ECB has bought themselves some time with this TPI thing that they put together. And, it's I get another moment of, hey, we're Europe and we talk in measured tones and the world wants to believe that we have answers. So they're going to believe us that we have answers for another 8 weeks. And then what? That's the way I look at it at this point. Mm-hmm. They believed Mario Draghi for 10 years, which was dumb, but they did. And so I don't know. Like, to me, it just seems like September, there's a confluence of events around the late September period. It'll be about 13 weeks at that point since the euro hit parity with the dollar. That gives it plenty of time to decide, is this a dead cat bounce or is this as low as the euro is going to go? What's going on with the dollar? Is there going to be a global recession? Has the Fed raised interest rates too far? And for everybody to kind of digest all of these things that have happened this summer and then go, oh no. And then if the Fed comes out and raises another 75 basis points in September, everybody's, cooler heads prevail thesis are going to collapse in a heartbeat. And then 4 days later, the Italians are going to likely elect a supermajority of center-right populists who are going to want to take the country out of the European Union. Mm-hmm. Then what? And we're starting to get into the summer heating season, and so.
Well, there's a lot to pick apart there, Tom. But
right. I didn't even know how to pick all of it apart. I'm just throwing it out there, what you put all that together, what's your conclusion? Dollar liquidity crisis, that's like the base case, right? So,
mm-hmm. Yeah, I think we'll get to a bunch of the different parts there, but sure. I wanted to get your take on why we saw Draghi and Boris Johnson, let's say, mm-hmm. both resign relatively in short succession to each other, and I don't think they were the only heads of state that had resigned in that time as well, right?
Yeah, no. So Bulgaria's government fell. One of the Baltics, was it Estonia or Latvia? Estonia, because Latvia has been the one that's been about like the Jack Russell Terrier of the EU, barking to put every Russian in the gulag and take their children away from them and all the rest of it. Mm-hmm. It's just silly to listen to the Latvians talk sometimes. So. Yeah, we had at least those two things happen. So it's interesting. Boris Johnson and Mario Draghi are really interesting. I see that as a trade. So Davos has been wanting to get rid of Boris Johnson since the day he came out and said, we're going to go for herd immunity over COVID. And then they tried to kill him 3 times. They gave him COVID. There was a car accident. It was there were literally 3 incidents where Boris Johnson was nearly killed, or at least, taken out of the public. Taken out of the public eye. They finally got their pound of flesh. They got him on a classic nuts and sluts kind of, old-fashioned British sex scandal. Mm-hmm. Okay. Now Boris Johnson is not like any paragon of virtue or anything. Let's not kid ourselves. He's certainly signed up for all the climate change Malthusian stuff since he's Stanley Johnson's son. But that being said, Johnson was clearly put in place by the U.S. post Brexit to ensure that Brexit happened as a big, thumbs up to the EU, right? And if Trump had been reelected, if Trump had actually been allowed to take his place in a second term that he earned, then this dynamic would be completely different. Johnson would still be prime minister, right? Because the United States and the British would have strengthened their relationship as a bulwark against, and populists and sovereigntists within the US and the UK would have strengthened themselves as a bulwark against European globalists that want to tear both of them down. And the problem here is that City of London is sided with, and most of the British aristocracy sides with Europe. Okay, so Johnson was always this figure, this very flawed figure, right? Because if they really wanted to put somebody, in charge of the Tories who had some spine, they would have put a real Brexiteer in charge of the country, but they couldn't get that through politically. They couldn't get that through the Tory morass. So Johnson being taken out was a pound of flesh gotten by Davos to undermine Brexit and bring the Brits, to take the Brits away from the U.S. Remember, Biden's first thing he said before he took office was, "Oh, by the way, Britain, we're going to reverse Brexit on you for all intents and purposes. We're going to review the special relationship between us. There's not going to be a trade deal, yada yada yada." That's pure Davos speak, dude. Like, that's literally Joe Biden saying that could have come out of the mouths of Michel Barnier or Donald Tusk or Jean-Claude Juncker or Ursula von der Leyen or any of those people. It's literally the same quotes. So Johnson's that. Now, Italy is far more complicated. Okay, and I don't know how much time you want to devote to this, but to unpack Italy will take at least 5 minutes, because the Italian situation, again, far more complicated. The Italian, like City of London, the Italian and the British aristocracy, the British, bureaucracy, whatever, aristocracy, whatever you want to call it, are all in the tank for the European Union and Davos. Hell, the Club of Rome is practically proto-Davos for all intents and purposes, going back to the 1850s. People have always had this idea of a transnational European architecture, and it's deeply embedded within the upper echelon of the Italian oligarchy, the Italian political elites. But Giuseppe Conte, the leader of Five Star Movement, was Merkel's bagman when he was put in charge as prime minister under the populist Lega M5S government that took power after the 2017 elections. He was caught on a hot mic having a conversation similar to the one in episode 3 between Anakin and Palpatine at the opera, saying, "Oh, no, I've got this. Don't worry, Italy's not going to leave the EU. I'm on top of it." Okay, so he was Merkel's bagman to hold Italy within the Euro and within the EU back in 2017. But the American influence within Italy is very, very, very strong and very deep. Okay, so now it was Conte who started throwing Draghi under the bus. It was Conte who started the political revolt within the Italian parliament that forced Draghi to leave the big NATO summit early, about 2 weeks before 2 weeks before he resigned the first time, right? And then there was, the protests in Rome and everything else. And Conte was going on, this is the key, he was going after Draghi over energy security, not over supporting having talks with Russia to end the conflict. Conte was all about energy security because the Germans were stealing all the gas that was coming in from Russia and putting it in their storage tanks and not putting it in the Italian storage tanks. And then everybody was lying about it, including Draghi, and everyone was lying about it. But the numbers were there if you went looking for them. And I have friends in Italy who funneled this information to me. I'm like, oh, this is clear. So at some point, Conte realized, and I would say was also told, oh, by the way, sorry, we're taking Italy back against Davos. So that you're going to be the vanguard by which we take down the European Union. Because it's always been that if Italy leaves the EU, there is no EU. The EU starts to splinter in a way that is irreparable. Mm-hmm. Now, Conte only goes down this path if he has people behind him who are as nearly as powerful as the people that he's fighting in Italian parliament. I mean, Lega, Matteo Salvini and Lega rolled over, Forza Italia rolled over because they were in no position politically. They didn't have enough power to stop what was happening. So, you keep your hand in it. You do what you have to do. Like, and it is what it is. And they've lost a lot of trust of the Italian people because they can't see what's going. They don't really. They're at the Italian people are at this point. They just don't care. They just want this over and done with, and they want to be ruled by Italians and not by Germans. And my argument is that Conte doesn't make this move as Merkel's former bagman unless somebody is standing behind him who's powerful. Now, who's more powerful than Davos, or who can stand up to Davos? The New York commercial center banks, the Federal Reserve. Again, the takedown of Draghi further underscores this idea that there is a massive split at the top of the power structure that we've all lived under as one big monolith for most of our lives. But we're at the point where as Europe tries to push for global central bank digital currencies, no more commercial banking, no more capitalism, no more fun of any kind. Like, that's it. Y'all get to eat bugs and have a social credit score. I'm like, I'm sorry, I just don't see the guys on Wall Street going along with this. I mean, some of them, sure, if they were bribed or paid off. Larry Fink, Bofa, and a couple others, absolutely. I believe that they're in the tank with these people, but I don't believe that JP Morgan is down with this. I don't believe Goldman is down with this. It's very clear from the statements that they make about where they think the market is going and where Jamie Dimon, every time he opens his mouth, is literally saying, oh, by the way, we're going to crash the economy in order to break these people who are trying to destroy your life. But he can't say that because he's Jamie Dimon. But he is saying it if you know how to listen to it. And I hate to sit here and like praise Jamie Dimon of all people, but like the reality is that Jamie Dimon is looking across the table and wondering if his future is secure. Okay. That's how bad things are. So if that's the case, and I'm right about that, then they plus sovereigntist forces that still exist within the American military, because remember, there's 100 American military bases in Italy. There's a deep relationship now in this respect. So like there's all of this laying out that if Europe decides they want to like go in and bring French troops in to pacify Italy, I'm like, I just don't think the Americans go along with this. Like if it gets to that state, I don't think it'll ever get to that state, but that's the bluff that's on the table here behind the scenes. So that's what I'm thinking, Tom. And so I think it's Johnson for Draghi. Davos gets their pound of flesh and gets Johnson. Fine. We take Draghi out from underneath you and we force snap elections before he can get all the legislation passed to tie Italy's budget, like they did to Greece, to the European Commission, and into all of this legalese and all these bailouts, right? That will force any populist Italian government that comes in and tie their hands. That's what they were trying to do. That's what Draghi was put in power to achieve, and he failed. And so now what? So now when the elections happen on September 25th, a full 6 months before they were supposed to happen, or 8 months before they were supposed to happen, and the way the polls are shaking out now, because Italy has a similar system to the Brits, which is it's first past the post on a seat-by-seat basis. It's not just proportional representation like it is in Germany, or I think like it is in Germany and other places where it's just, the Bundestag in Germany is just set up as, well, if you got 5% of the vote, you get 5% of the seats. You got 27% of the votes, you get 27% of the seats. It don't work that way in Italy. Both the Italian Senate and the Italian lower house, first past the post, they're on the center right coalition in Italy is polling like 49%, and they're getting more minor parties, including the Italexit party, which is now polling 3 to 4% on their side. Like they look at a 54, 55% majority. They're going to take a super majority in both houses in Italy, which is more than enough to amend the Constitution and walk out of the European Union if they need to, or walk out of the euro and just wake up one morning and go, nope, you're all out of power. Put Mattarella in jail for overstepping his bounds, the president, all this stuff, dogs and cats living together. Nope, we're leaving. And I don't know about you, but I'm looking at that scenario going, yeah, the euro's 70 cents. and Italian bond yields go to 9%. And Christine Lagarde doesn't have any ammunition for this.
Mhm.
And they're freaking out behind the scenes. You can see it everywhere that they're freaking out. But
Mhm.
they always walk out there, well manicured and speaking even tones, and they don't do the Italian thing and wave their hands because they're Germans. It's what it is. So
Yeah. Well, Tom, you highlight what a complicated chess game, and what a complicated chess game this really is. And that's why I appreciate getting to have this conversation with you, because, there's so many of these pieces to highlight. But, I want to go back to the piece of the US commercial banks. Like, why is their power incentive really set against the introduction of these CBDCs and this Davos agenda, as you call it?
Well, it's simple. There's no need for commercial banks with a full-blown social credit system.
Mhm.
You need a loan? Oh, I know. Did you say something bad about Germans on the on Twitter? Well, you can't have a loan. It's simple. Like, you're fat, your cholesterol's too high, you're not allowed to order pizza. Like, no, I mean, literally, Christine Lagarde gave a speech stating this 4 years ago, 2018. Go look it up.
Mhm.
Like, she talked about this. Well, wouldn't it be great if we had a world where, people chose broccoli over pizza? Yuck. Because she hates pizza. Like, I love pizza, but it's bad for me, so I don't eat it, but or often.
But you have to have that choice.
The choice.
Yeah.
I have the choice. I choose whether or not to, eat a diet that keeps me healthy and, so I can be prickly and doing this thing well into my 70s, or I can go out in a blaze of glory and eat pizza and, and drink whiskey until my liver gives out. Like, it's not tough. It's my choice, not Christine Lagarde's.
Mhm.
And capital formation in a nominally, you can't have capital formation in a system like that. Okay, you cannot. Like Jamie Dimon or Jerome Powell or John Solomon or any of these people, like them or not, you can choose to hate them. You can choose to be angry with them for the amount that they have stolen from you over the years, without a doubt. I'm happy to talk about the excesses of our commercial banking system.
Mhm.
But what I want you to understand is they understand at the core of their being that the capital formation and economic dynamism comes from having a real commercial banking system. That's how wealth is created at a mass scale. Okay, it's how we do it. It's the best system we've come up with. It may not be perfect. There may be all sorts of regulatory capture, and these banks may be cutting a vig that they don't deserve, and yada, yada. Fine. Let's deal with that after we deal with the Euro Malthusian commies that want us to eat bugs and live in Minority Report. Like, that's what we're looking at. And I'm getting yelled at by libertarians now. They're calling me a rampant statist for just looking at the world through that lens and going, yeah, well, but these are the, whose side are you on here? Are you on the side of humanities? Because I am, and I want to get through this. Because if we just sit here and hold our nose and say, no, taxation's theft, like, great. You can keep saying that all the way to the chemical shed when they put you in the back of your head. Like, that's what's coming. Or,
again, to have that perspective, you need to have that perspective. What's worse, right?
Right. I mean, and more importantly, what I keep trying to argue for people to get them to understand is that there's an order of operations to how this plays out.
Mm-hmm.
Okay, you can't take down people who think they're entitled to run the world and think they've been doing so for the last 1,000 years or 800 years or whatever. Certainly since the 1500s, with the beginnings of the Amsterdam, or late 16th century, at the beginning of the first stock exchanges in Amsterdam and whatnot. You can't break that down. You have to use sharks to take down sharks. You're an ant. There are giants fighting, and you're an ant. What you should be trying to figure out is who you don't want to be stepped on. That's the best metaphor I've got for you. Now, once one giant beats the other giant, you can choose which. When I look at that, I'm like, it's the same argument. Murray Rothbard used to vote, guys, right? Like, Murray Rothbard, the great Mr. Anarcho-capitalist, everything else. He's always voted. He's like, look, I'm going to vote for the guy who gives me the slightly better deal. Like, it's not a principled statement. It's I'm acting in my own best interest. You can choose to not. That's fine. But like, at the end of the day, if you're not willing to sit down and do the hard analysis of what the actual motivations and incentives of the people who are actually fighting this game and involved in this thing, then I have like news for you. I don't care what you have to say. I don't care. You can call me whatever you want. Doesn't matter. I'm still more right than you are because I'm actually trying to do that work because I want to not eat the bugs. It's that simple. I'm motivated to leave this world in such a way that my daughter doesn't have to eat bugs for a living. She can still eat steak. That's it. It's not that tough. And that's where this comes from. And that's why I'm willing to always be open-minded. And if I'm wrong, I'm wrong. It's not about my ego. It's about stopping. It's about trying to parse what's actually happening. And if I'm wrong, I'm wrong. I'm a scientist, dude. I did chemistry research chemistry for 25 years. I have failed. I've set up a whole lot more experiments than most people ever had and have many hypotheses fall flat on its face. I know exactly what that looks like. Okay. The reason why I get so agitated about this and the reason why I'm willing to call people out and name names is because they've had a responsibility to up their game, to keep things from getting to this state for 20 years. Mm-hmm. The people who taught me the basics are still giving me the basics. And the game has evolved far beyond that. And it's not just a matter of holding your breath and counting to 10 and saying, turn blue until and say, no, taxation's theft. It doesn't work that way. The world is far more complicated than that. We should actually be trying to do as little harm as possible. I always remember the argument about the libertarian Hippocratic Oath. And I've always thought of this as some kind of ugly plate of spaghetti, trying to tease out individual strands and slowly but surely, unwind the mess. That's the best you can do. It's not that I'm wanting to partner with Jamie Dimon. No, but I want him to beat Klaus Schwab, and then I'll go after Jamie Dimon. Mm-hmm. Happily. And then I'll go after this guy, and then I'll go after that guy, and then I'll go after that guy. Open borders and all the stateless society crap is all consequence of raising our consciousness away from the morass that they've put in front of us every day. Mm-hmm. It's not a system you impose. There's one for you. This is the thing that so many libertarians just miss in their analysis. They want to just impose ending the Fed. Okay.
What does that actually look like?
Not going to work. Yeah. What does that world look like? Do you want to live in that world? Because I don't. But I think that there's a better way of disincentivizing the system so that the Fed becomes irrelevant is the better way to look at it. Mm-hmm.
Well,
that's the process we should be looking at.
Mm-hmm. What you're explaining actually reminds me a lot of the Russia-Ukraine situation. It's not, Russia bad, Ukraine good. It's not Putin bad, Ukraine good. There's so many nuances to this, to understanding this whole puzzle. And then, like you say, I would side with Jamie Dimon despite his misgivings. And then once we get to that point, then we can call him on his crap and, all of the gold manipulation, all of that other stuff, right? It's unfortunately, like you say, that order of operations really matters. And I love how you put that. And I want to ask you a little bit more about that. Why? Well, I want to try to walk through this step by step because you do an excellent job of explaining it. So, why is capital starting to leave Europe, and why does Davos, as you say, maybe need a higher gold price, and what are they trying to do to bring that price exposure to the market?
Okay, so there's a couple of things going on here. The ECB can go bankrupt. The ECB is not the Fed, right? This isn't. I'm not the first one to have this. I will pay. Martin Armstrong taught me this. Years ago, I had to give up. I was a classic, dollar bad, all going to hell. I was that guy. And it took me years to go, no. And listening to Martin on my shoulder going, no, we're going to have a big dollar wave and it's going to look like this because of these things, because of the structure. The euro is badly designed. And maybe it was badly designed on purpose. Maybe maybe they sought to take what is a structural weakness and turn it into a strategic advantage by, using its inherently flawed architecture and foundation to then do the big flip where, we'll just get rid of all these debt-based currencies and we'll move to central bank digital currencies. See, individually, none of this stuff really works. That may be the case. I'm not, you can go with that, whatever you want to do. The ECB needs a higher gold price because the only tangible asset on its balance sheet that's worth anything is the sovereign gold of the member states, central banks. The ECB controls what? Something like 14,000 tons of gold, 11,000, something like that. I don't remember what the number is off the top of my head. But it's big. It's a lot. So if the U.S. raises interest rates and breaks the ability of the offshore dollar markets through the European banking system to create credit dollars in the so-called euro dollar markets, which is where a lot of Davos's power comes from, being able to create more dollars than the Fed does. Right? If the Fed can successfully raise interest rates and force banking stress onto those countries, it's going to it forces sovereign debt prices in Europe to rise as well. The Europeans have chosen so far, they've chosen to allow the euro to fall from $1.25 down to $1.01 while trying to keep bond yields from rising above U.S. bond yields, right? So we have the weird situation where Italy hasn't had an unappointed government from a foreign power for over 10 years, and yet their debt only just recently trades at a slightly higher premium than U.S. debt, the most trusted debt in the world. Is that insane? No. Italian debt should be trading at 9%. The Italian 10-year should be trading at 9%. Mm-hmm. Okay. Why is German debt, when these people can't even heat their homes, trading at 1.8% lower on the German 10-year than the American? Why are they trading at 0.9%, 0.95%? And the US 10-year today is trading at 2.75, 2.8%. Why is that? Well, it's because the ECB has been running and has been literally incentivizing people to run carry trades to keep these things low. Well, if the Fed starts to raise interest rates aggressively and those rates have to rise, then all of a sudden those carry trades have to unwind, the euro has to get trashed, and at some point, confidence in the European system collapses, and then it starts to finally get out of control. The only thing propping up European debt markets at this point, because there is no market for their debt, is the European Central Bank. And if the Fed keeps raising interest rates, then the value of that debt is going to fall as the interest rates rise to keep pace with the Fed, even if it's all just the fairy tale. Well, the German inflation is lower than the American inflation, so that spread should be blah. Like, yeah, okay, play that fantasy in your head until you're blue in the face, until somebody won't take that trade from you, and then the whole thing collapses, and your hedge book blows up, and then you're screaming for the ECB to bail you out, which they don't have legally, they can't do. So now, if that's the case, that's what's happening, then of course the ECB is trying to keep the kibosh on, trying to keep bond yields as low as possible. As those fall in price, you got to offset the shrinkage of the ECB's balance sheet by a rising price of gold, which is what Basel III is all about. So Basel III rules are all about trying to do away with the derivative paper gold market and collapse it to a physical spot market, or at least get rid of the, and it's very clear that, and Alistair McLeod wrote about this. I wrote about it. He did a much better job of explaining all this because he actually understands this stuff better than I do. I look at it in the opposite direction. I just go, well, yeah, the ECB wants a higher gold price. The Fed wants a lower gold price because the Fed doesn't want gold breaking out and calling into question the confidence people have in Fed policy. This is nothing new. That analysis is still valid, right? That's classic kind of Austrian libertarian analysis of the Fed has been that way. It's still valid. It's been that way for 25 years. It's still 25, 30 years, as long as I've been associated with it, exposed to it. It's still valid, but it's not valid. But there's going to come a point when the Fed's going to want a rising gold price. FYI, mm-hmm. We'll talk about that later. So that dynamic is what's going on here. So this is why I firmly believe that the Fed is not working with Davos, is not working with the European banks. Why we know that American banks won't take and haven't taken for years, have not taken European sovereign debt as collateral for repo contracts. And the first one to say no to this was Jamie Dimon and JP Morgan. Zero Hedge in 2019 wrote article after article about why is JP Morgan trying to crash the friggin' bond markets going to create a repo crisis, blah, 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 blah. I didn't really quite understand all the technicals at the time, but I didn't need to. I just remember those articles. And then the repo crisis in 29 September happened, and everybody was like, see, we were right. Like, yeah, but ask yourself in hindsight, why? What
does
were
that
they
make
actually doing?
Does that make the U.S. banks now more insulated to a euro debt crisis than they were in let's say 2008?
Absolutely. And you cover, aside from the fact that there is not a whole lot of crossover between them. Moreover, remember a couple other things to put into to weave this pattern here. One, in the United States, most of the debt that we issue is corporate debt. A lot of corporate paper gets issued. Apple's, doing a massive bond raise at like 0.5%, 1% or whatever. We don't issue, most of our bank debt is mortgages, car loans, whatnot. But the real debt markets in the United States are corporate paper. In Europe, on the other hand, it's all bank debt. Okay, so when a business wants to expand, they go to the bank, get a loan from Unicredit, Intesa Sanpaolo, or ING, or Deutsche Bank, or whatever, and then they go expand their business. And if that loan goes bad, then it directly affects the bank's balance sheet. Here in the United States, Apple, sells some debt and can't. And it doesn't work, and the project doesn't work out. Well, then they've got to do a dilution, and their share price falls, and they've got to do a thing. They got to do a mea culpa to their shareholders, blah 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 blah. Restructure it, kill off, whatever they got to do. But it doesn't affect the banking system directly. So there's that one. I hadn't thought about that, but I only just integrated that into my thinking about this about 2 months ago now. So you have that. And then what does that also do? That's the main mechanism by which the Eurodollar markets are funded. It's gearing in European banks is, in dollar terms, is how Europe has always exerted influence over our monetary policy through LIBOR. We no longer have LIBOR in the United States. We have SOFR. All the debt in the United States is indexed to SOFR now, or all new debt is, and the legacy debt's being rolled out. And JP Morgan is out there literally telling everybody, you better get in early because LIBOR is going to go away, and there's not going to be any liquidity by the time it's depreciated. So we have that split. We've got policy amongst the major central bank, amongst the major banks, that they're not willing to take European debt in the repo markets, which is why the Fed then had to step in, right? And why the Fed also then created a foreign repo facility last year in order to help manage the decline here. All of these little things like that. When I see something like that, I know I've talked about this in the past. I know I'm kind of going off. There's so much to talk about, right? So this all started with me when Powell raised the reverse repo payout rate 5 basis points above the Fed funds rate back in June. So that was the shot across the bow, saying, "Hey, oh, by the way, no, we're done. That's it. No more. We're tightening now. Mm-hmm. We can't say we're tightening because the markets will freak out, but we're tightening now." A month later, or 8 weeks later, at the next meeting, they create the foreign repo facility. So now they have domestic reverse repos and foreign repo facility. This is a way of saying, "Hey, we're off the reservation. Now let's negotiate." Hey, oh, by the way, I've got aces, but I'm not gonna go all in. Let's negotiate this out. And then they went after, and then in the fall they went after Powell, and with the insider trading scandal, trying to get rid of him. And then they still tried to push Build Back Better. They won't listen. These people will not take no for an answer. Okay, and this is the way these things work out. So it doesn't always look like it's not just that, well, this, then this, then this, and this, that's all on this side of the ledger. You got 95 things on this side of the ledger, but there's one thing on the other side of the ledger that says, no, the Fed's in cahoots. So you believe the one thing as opposed to the 95 things. Like, don't be dumb. Like, this is what's happening. So we have a functional split now. So what we need is a catalyst for a massive rise in European rates based on a loss of confidence. And again, I hand you the Italian elections. To me, that's the biggest possible potential catalyst on the horizon, other than like nuclear war, or, let's not go Six Sigma. Well, this one's staring us right in the face, and it's 5 weeks away. And the Fed could raise interest rates 4 days before that, a quarter point more than the market is expecting. Right now, like the LIBOR SOFR spread is like 12 basis points. They're trying to tell the Fed not to raise rates at all. Like, are you kidding? Like, you guys have got a lot of catch up to do, because it's going to be 75 basis points by the end of September.
And we just got the same CPI print. It's not accelerating anymore. We can totally justify only doing 50.
Yeah, but the Fed, let's see, the CPI print is good. And at the same time, the same breath, the same people who are decrying that the Fed won't raise interest rates because they don't want the stock market to crash. Well, the stock market's rallying. But then they were also going to say the Fed's going to pivot in September. Like, excuse me, the Dow's at 33.8, for Christ's sake. Like, the Fed can happily raise by another 75 basis points 8 weeks from now, after signaling they're going to do so with Jackson Hole at the end in a couple of weeks, and watch the markets, go through a 10% correction. And that takes us down to what? 30 on the Dow? And so my question to everybody listening to my voice who thinks I'm crazy, like, you have a choice here. You got the Republicans coming in the fall. You've got, Pelosi is going to lose the speaker's gavel, blah, 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 blah. Biden's going to be put out the pasture. We might wind up with President Harris, which would be crazy. Or we could have starving Germans, people who don't shower, and shuttered industry all across Europe, with 1 million people sitting on protesting on a square in Rome and refusing to put it on camera and refusing to allow you to talk about it on Twitter. And the Russians sitting there going, we can just shut off all the gas. If you want to act like, a bunch of screaming ninnies, because we're done with you people. Like, really? You don't think that, where are you going to put your money? China? The data coming out of China is worse than it's coming out of the US. Where are you going to put your money? The money's got to go somewhere.
Not to mention,
it's a hurricane. The water dropped out of the sky. It's got to go somewhere. Where's it going to go?
Not to mention, if you can get your money back out of China, right?
Yeah. Right. You can get your money out of China in the first place. The Chinese are now signaling hard that foreign investors who put their money into China may not get it back out again. We may just take it, steal it, and use it to, pay off Evergrande debt. Like, it's in Xi's common prosperity, like, bucket list of things to do. Bankrupt George Soros and steal his money and give it to the Chinese proletariat. It's, come on. Like, it's not even hard. Like, I don't know what. I'm sorry, Tom. It's just like, that's what's going on. So you've got, when you start to really put this together, you have to ask yourself the question, where are you going to put your money? I don't know about you, but I ain't putting my money in, Europe at this point. What am I going to buy? European farmland? What am I going to buy in Europe? You're going to buy Siemens? No. You're going to buy BASF? They're not making any ammonia. They won't be able to feed people. What are you going to buy? You're going to buy the CAC 40? You're going to buy the DAX? Really? Or are you going to buy the Dow? What do you think the people in Europe are thinking right now? They're going to buy the Dow. Which is why the Dow is trading at 33.8, why gold hit 1,800, why silver got off the ground at $18, and why the industrial metals markets are all off of their extreme lows after a pump and dump, which was wholly manufactured. Like, but has settled now into a new pricing regime where the old highs pre-COVID are now the new lows post-COVID. So, where you can put your money in the Dow or right. So that's what I think about all of this. And that's why I keep looking at, we have a new we now have a new floor in industrial metals, right? And I think that's why we're looking at the next phase of this. That's where we're headed next.
Yeah. So, getting back to that idea that you mentioned, how could the U.S. also need a higher, or the Fed also need a higher gold price to balance their books? How does the debt really play into that equation?
It's funny, and I'm not going to go off on this particular tangent. That I was chatting with a patron of mine the other day, and he was laying out some stuff about Russia and Russian stocks and liquidity and access to rubles and yuan. Like, oh no, I started to see something completely different that I need to really think about. But let's just a little bon mot, FYI, JP Morgan is the only bank that actually does custodianship of Russians and Chinese stocks now. So FYI, they're the only ones with a US based ruble or yuan liquidity. But how does this play into the Americans and gold? Look, if you break Europe in the order of operations, you break Europe, you break the euro-dollar futures market. And anybody who thinks that they take the euro-dollar futures market as any kind of stable signal as to what the market actually thinks, it doesn't. Do me a favor and do a spread analysis of the inversion between the December and March contract over the last 2 months, the last 6 weeks. You'll see it have gone from everywhere from +6 to -41 back to 0 in 6 weeks.
Mm-hmm.
Yeah, more 5 weeks. It's crazy. They have no idea what's going on. So the euro-dollar inversion, by the way, is moving out to the June contract now. So they don't have any idea what the Fed policy is going to be. So in the long run, if you break the euro-dollar markets and you break the European banks and you break the ECB, well, you now still have a fiscal problem here in the United States. You still have a big problem, which is that you're going to have to, the Fed, in order to do this, may have to raise rates to 6%. Right? Now, 6% is going to just destroy the American economy.
Mm-hmm.
No argument. It's going to send the dollar to 125. It's going to be bad, like 115, 120. I don't think it's going to see the projections of the dollar going like 150 are insane. I think 115 to 120 is about as high as it'll go. But I was chatting with Francis Hunt, the market sniper, about this last week, and we were both in agreement about this. So if the dollar, so we're dealing with that in that scenario, right? With 6% on the Fed funds rate. I don't even think the Fed has to get there, but even 4.5 or 5%. But I think 6 is where they're going to go. And a strong dollar, crazy strong dollar, massive capital flight into the United States. Well, that capital is going to start to flee once it's going to rush in like waves, and then the waves are going to rush out again. After things get really bad in Europe and things are really cheap in Europe, everybody's going to go, look, dude, Europe's a bargain. Can't get any worse than that. And they killed Klaus Schwab. Yep, it's time to go in. The day that Klaus Schwab's driver puts 2 in the back of his head is the day I go long Europe. Like, okay, long rope makers and guillotines. Been saying it for 3 years now. Like, once we get to the guillotines moment, that's when I'm going to go long the particular market where they're going, right? Mm-hmm. So, under that scenario, how does the United States deal with its fiscal problems? And they're massive. Well, then you need a rise in gold price. But how do you do that? You do that by remonetizing gold. Mm-hmm. I mean, and we're not the only ones having to think about this. And it's clear that the Russians and the Chinese are accumulating gold for a particular reason. In effect, for all intents and purposes, nationalizing their domestic production. The Chinese produce about 300 tons of gold a year, 350. The Russians produce about 250. None of that leaves the country. So there you go. Now, How does the United States get out of this high interest rate regime? Well, in 1983, when we were still establishing the dollar reserve standard, you take interest rates to 20%. You can get a 30-year bond paying 13, blah, 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 blah. It was all good, right? Like, who wasn't buying U.S. Treasury series at 13% on a 30-year bond? If you didn't, you were an idiot, right? Greenspan wound up retiring them and paying you off at par, like 5 years later, or at current price 5 years later. So you scatter money, So greatest trade ever, one of the greatest trades ever. How do they get out of it? Because we can't afford to service debt at that level. We have to stop printing money. We have to stop deficit spending. We have to stop being the only world's reserve currency. Well, again, I was listening to, and I say this all the time, I was listening to a podcast between Grant Williams and Judy Shelton a couple of months ago. Mm-hmm. And she brought up a very salient point about the Trump administration. And what she said was that when Trump and Mnuchin were talking about 50 and 100-year bonds, remember that talk early in the Trump administration? Like, who's going to buy a 50 or 100-year bond for the United States? And at what price are you going to be able to pay that? Now, when interest rates were at 0, you could get really good terms on that. But now at 6%, you're not going to be able to get good terms on that. But what if you put those 50 or 100-year bonds out with a 5% or 10% claim against Treasury gold? What interest rate do you issue that at? A lot lower than the market. Because at that point, you just take your hand off the scale, take your thumb off the gold market, and let it rise. Mm-hmm. Then Basel III, which is today a strategic play by Davos to save the ECB in Europe, becomes a strategic play for the American commercial banks to reassert dominance, or at the very least to effect survival. Part of the problem with handicapping the future in any of these markets, in any of these scenarios, is that we all take today's situation and project it linearly through time. This is the hard part. Mm-hmm. So everything looks eternal. So the European Union looks eternal. The Americans not defaulting on their debt looks eternal. The Saudi peg to the real, to the dollar looks eternal. The Chinese Communist Party looks eternal. The Russian, like everything looks eternal, but it's not. Everything moves and ebbs and flows. So the big question is, while all this turmoil is happening in the West, and it's going to get ugly because Davos is not going to allow us to get out from underneath this and do any of this without a lot of pain, and we're not going to be able to fight this war without. It's going to be ugly. It's going to be terrible. And obviously, in the grand scheme of things, I know you've heard Martin Armstrong on the show, that the likely outcome is that at least temporarily, China becomes the center of the world 10 years from now, financial world 10 years from now. It's not, looking at the world today, that is, I don't need a computer to tell me that. Mm-hmm. Right. I mean, not that I'm not trying to bag on Socrates at all, because I think it's a very interesting thing that Martin's created. I actually have a lot of respect for certain aspects of it. So, like, I look at that and I go, yeah, that's not really a terribly hard call, right? Mm-hmm. Because we're already here. We're in it now. Now we can see it. And if I can see it and you can see it, then, well, everybody can see it. Then the big money players can see it as well. And if the Chinese refuse to allow us to allow their money into China for as long as possible, then we have to stew in our own morass while they build a fortress balance sheet. And here's another question for you. What if the only thing that allows China, and this is a sop to the China hawks in the audience, what if the only way that China is capable, and I'm just vamping here, is capable of gaining enough trust in the marketplace to become that center of world power, financial power, is for the CCP to be overthrown?
Not to mention how much gold they may or may not have.
Yeah, let's not even go there. I mean, I think the big one for them, I don't think that I'm just throwing that out there. I don't, mm-hmm. Because there's a lot of good discussion about how fragile things are. Why is he, clamping down as hard as he is politically? Why is he blah, 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 blah? Why? What's this going to look like? What's the world going to look like 10 years from now? We don't know.
Mhm.
But so it's very important in some ways to just be always if there's a theme here, it says be flexible and really constantly think, how the board state can change and then how people would react to that change in board state.
Mhm.
And, if you can do that, and it's very difficult, guys, I'm saying it's easy, but it at the same time, it's really important that be our guide, when trying to analyze what's happening. And then we can dig into the numbers and we can dig into the, all the rest of it. But the big conceptual stuff, you can't dig into the numbers if you can't put a framework around what your hypothesis is about what you think the rules of the game are.
Mhm.
Like, how do you know what I mean? It's like boundary conditions first. Again, chemist, physicist, boundary conditions first, then you start trying to solve equations and problems. And that's the way I work.
Mhm.
So
Tom, you mentioned that we're basically now for the industrial metals, the old highs, the pre-COVID highs are now the new lows. So is that kind of partially the basis for what you're calling the next round of inflation that we're facing here?
Yeah. I was thinking about this the other day, right? And to me, I started going through the charts because I do my market reports for my patrons twice weekly, and I have to constantly come up with new things to talk about as opposed to just doing the same 5 charts over and over again. So I check in with the industrial metals every once in a while. I was looking at them. I looked through all of them, all the ones you can find on investing.com on the front page, right? So aluminum, tin, lead, zinc, nickel, right? I just looked through them all, and they all, if you take a 5 or 8 year chart of them, it's very simple that, what was the previous high is now the correction point, now is support after because big, generally speaking, they all, relative to today, they all look like big, long consolidation periods, and then an explosion higher, and then a correction. So now let's think about where we are. We had cost push inflation all through 2020 and 2021 and into the early part of 2022. But the industrial metals peaked and then collapsed. Energy prices are still relatively high. So input costs for producing metals is higher structurally. Therefore, you can't expect, you'll never see $1.50 a pound copper again, or, 175 of, an MCF natural gas, right? Because the input costs are just too high right? Or 85-cent lead, or whatever, $1 a pound aluminum. So now if that's where we are, and I don't see energy prices going back into the 40s as much as Janet Yellen would like to push it there, and Davos would like to push it there to starve the Russians, it's not going to happen. The level of demand destruction it would take to get oil back to $40 a barrel would be, did you nuke Berlin? Oh, okay. Now, yeah, we can have $40 a barrel oil. That's what we're talking about. There's too much inflation. There's too much money out there. It hasn't been, we can't destroy it all. It's not just credit dollars that can be destroyed. So we had cost push inflation. That's run its course. Supply chains have been reorganized. They're not good, but they're better, and they're going to continue to get better because that's what humans do. They respond to the new situations. We have higher prices for all these things. The cure for high commodity prices is high commodity prices. So we will see new production come online. We'll see new inefficient, less globalized supply chains for all of this stuff. It'll all happen at a higher price, but it'll be the new floor. But what are we looking at now? Now we're looking at all the stuff we talked about today. This massive, massive fight between giants who want to control the future of the world. And they're going to fight. And they're going to do everything imaginable to destroy the confidence of the institutions that back them, or that they've erected as the proxy for their power. Right? You tell me what you're looking at when you look at the Biden administration. All I see are a bunch of vandals trying to burn the country to the ground at every level, from every perspective, culturally, economically, physically, every way, militarily, you name it. That's what they're trying to do. Every time one of them opens their mouth, it's to make the United States look more like clown work. every single day. My Twitter feed blows up on a regular basis with people going, how long until the United States, implodes politically? They really have gaslit you into believing that. I don't know about you, but I live in the United States. I live in Florida. I got news for you. There's no political blowing up here that's going to happen. We're not going to start, knifing each other in the streets over a can of cat food. It's not happening. All right. Got news for you. It's not happening. There may not be a whole lot of cat food on the shelves, but we'll make do. We'll figure it out. So the perception here is to create as much institutional unrest as possible, to undermine the pillars of the institution. And inflation comes in three forms: as in this demand pull, which all the Keynesians ever want to talk about, is all we've got; cost push, which they never want to talk about because they're usually the ones that create that cost push inflation, but they always want to call it demand pull in order to be able to win elections and stay in power. And then there's the loss of institutional confidence, which leads to Weimar, Argentina, Zimbabwe, blah, 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 blah. That's the next one. That's what comes next. That's the Volcker phase of inflation. Arthur Burns dealt with cost push inflation with the dramatic rise in energy and the breakdown of Bretton Woods. Volcker had to deal with the loss of institutional confidence with the United States with issuing Swiss franc bonds under Jimmy Carter. Okay. So that's what I think is happening, is the next thing that comes when everybody goes, you know what, I'd rather own gold, or I'd rather own Bitcoin, or I'd rather own land, or I'd rather own blah. I don't want to own the dollar. The first phase of this was the Fed's raising interest rates. I am short dollars. I need dollars. Sell everything else that's not dollars. Cool. Now it's all tangible assets. And now the question is, whose tangible assets? Mm-hmm. And that's why you're seeing a floor put in on that's why you're seeing the reaction we've seen in rates. Even though the Fed raised interest rates, we saw the 10-year collapse 60 basis points. That's why we're seeing the Dow back into nearly 34,000. That's why we saw gold get off the floor. That's why we're seeing industrial metals put in a floor and starting to build a new base for the next move higher. I think the next phase of inflation is where our institutions either have to sink or swim, ride or die. And if Davos gets their way, the institutions of the United States are going to collapse, and the dollar is going to go crazy. But at the same time, everybody else's institutions could collapse. And if we have worldwide institutional collapse, then everything is going to fall relative to gold. So during the last phase, it was just everything else fell versus gold except the dollar. Now it's going to be the dollar along with it. Mm-hmm. And that only happens at a generalized loss of confidence.
Yeah, it's just so many things to try to keep a pulse on there. And it's again, choosing which giant you want to be crushed by, I think is which foot you want to be stepped on, right? Yeah.
Yeah. And I'm like, and you wonder why I'm going to get done with this interview and go downstairs and smoke another cigar. Like, what else am I going to do? Like, but at the same time, what's important here is that I say that I'm only being half facetious.
Yeah.
What we have to remind ourselves is that, and this is where, recent events within my family remind me and remind everybody else, which is that survival is the goal. Mm-hmm. And you survive and you take care of yourself, not for yourself, but for all of those around you. Because if you don't take good care of yourself, the people who you leave behind are the ones most impacted. So do your best. Shore up your financial health, shore up your personal health, shore up your psychological health, because that's what's going to help you maintain that and mirror that for everybody else in your community or in your family. And that's how you get through stuff like this. Mm-hmm. It's the only way. That's how humans have gotten through it in the past. It's how we're going to get through it again. While the giants play and they fight, you need to avoid getting crushed, and you need to avoid allowing yourself to crush yourself. And I have to take that advice. I have to look myself in the mirror and take that advice every day. And it's very, very difficult because I tend towards self-abuse and, all of that stuff. So, you know what I mean? Like it is what it is, but that's what we have to do.
Yep.
And it's profound when you think of it in those terms. But
it really is. And unfortunately, I think we do need to think of it in those terms to make sure that we do really take that responsibility on ourselves to, as you say, shore up things that need to be shored up, to get your financial house in order, get your some food. I remember you and Colin talking about your pantries. That's
right.
We're never going to be worse off for being a little bit more prepared or thinking about things and how they might look 5 years down the road. This is never going to be something that's going to make you worse off. And as much as it sucks to have to think about, these relatively negative things in the world, I would much rather have a little bit of gold or a little bit of extra food around, as you say, as the giants are fighting and all of this gets, taken out in the wash.
Yeah, I really do believe that there are multiple ways that gold is going to go much, much higher in dollar terms than it is today. Mm-hmm. Your goal is not money. Your goal is what your money buys you. It's all that matters. Money is just the thing. It's a means to an end. It's not the end. Right. And so it's, always keep that in mind. Always think that, and always think about that, and remember that the people who are around you are far more valuable than whatever money you've got, mm-hmm. because that's where our wealth stems from in the first place. Our ability to coordinate with other people. That's why we buy money and we sell our labor and we do all these other things, and that's why we act as humans. And so, Klaus Schwab may not believe in that. He may think that that's old fashioned or that's stupid or whatever, but whatever, I don't care. Like Davos rhymes with Thanos, and you saw what that got him. Like, that's the way I look. I mean, I'm dead serious when I go through all of this. I'm like, you know what? I don't care. We're going to do what we want to do. Klaus, you can take this away from us. I got the worst piece of news I ever got. One of the worst pieces of news recently. I said last night, I saw Dodge is finally retiring the Challenger, the Charger, and all that. I'm like, because they're going to purely electric vehicles. I'm like, why? These are great. Why? They were making you money. It's great. It's so sad. Like I drive a Mustang now. Now I'm going to have to go buy a Challenger just so I can own both of them in my life because they're both cool cars. It's crazy. It's sad. Stop taking my choices away from me. Mm-hmm. It's just disgusting. Stop it. Bad Klaus. No biscuit. No bugs. No crickets. So.
Well, Tom, I think that's a good place to wrap up today's interview. Of course, your podcast, the Gold, Goats, and Guns podcast, is an excellent source for all this information that we talked about today. I quite enjoy it. I listen to every episode, and of course your blog tomluongo.me and mm-hmm. Your Twitter feed over at TFL1728. All excellent sources of sanity in this crazy world.
The Twitter feed is it is what it is. I just let it fly on Twitter. I just keep hoping that I get taken off Twitter one of these days, even though it's really, really good, for building a business. And just as everything else, I do have a paid service over Patreon, which is what supports all the work. And my community over there is an amazing group of people that help keep me on my toes and help keep me to thinking about things in different ways. Because it's again, all the stuff I just said about community, that's what you do. You mm-hmm. put people around you and you inspire them to, have great ideas. And then they bounce those ideas off of you, who has inspired them in the first place. And it's a give and take. And you're like, dude, that's brilliant. Thank you. By the way, I'm going to use that. And, it is what it is. And they're like, yes, absolutely. That's why I gave it to you. I'm like, excellent. And, you can't, that's because we're all motivated by the same thing. We're all motivated by this desire to get through this in the best shape we possibly can. Because what do we want to do? We want children and, leave a legacy and, and not die young, live fast, and leave a good looking corpse, to quote Clarence from True Romance. I don't know about you, but I want to watch this play out. You know what I mean? So
Yeah, I want to have a pile of well-used motorcycles and a horrible-looking body by the time I check out.
Yeah, I want to continue to have an embarrassingly large board game collection. That's my goal. I may have to build another house to house it, but that's what I want.
Yeah. All right, Tom. Well, I really appreciate your time and your perspective today. Thanks so much.
Thank you, Tom, for everything, and you guys, you do a great job.
Thank you. You do too. This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.